Welcome to chapter 6, and this is Silver Bullet. So the Silver Bullet strategy is based on liquidity. We need a sweep of liquidity. So you've obviously watched the liquidity video, or hopefully you have by now. Our preferred type of liquidity is a range high or a range low. So if you remember, we like to mark up our sessions with lines. So these are my session lines. So this is a session high, session low, session high, session low. That's the current high and the current low. If we can't get a range high or range low, we like a swing high or a swing low. So if you remember when we put our grey lines on the chart for anything of interest, so our swings, highs and lows, that's ideally what we're looking to have swept. So the basic premise for a Silver Bullet trade is as follows. We need to sweep liquidity. This swept some external liquidity way over to the left. This was a trade I took yesterday, New York PM session, but it's pretty much textbook. So in order for the first tick in the box, we need a sweep, which we had. The second we need is a market structure shift. So as the market is going up and down, up and down, up and down, here, this low, put this high in over here. Then this low, put this high in up here. So the moment that we break structure, so if we're going up, we expect to see a low going to a high, a low going to a high, a low going to a high, and so on. In a downtrend, we expect exactly the opposite. Highs and lows, highs and lows. So like a set step going down or a set of steps going up. The moment that we break this step, this low here with that candle, we've had a market structure break. So when that happens, what we're looking for is an extreme fair value gap. Now we had one here where my box is currently shown on the chart. So sweep, market structure shift. We were going up. Technically now with the market structure shift, we're potentially going down. An extreme fair value gap, which we have. So the trade is from this fair value gap with your stop above the high plus a little bit just in case the price comes back up and tests this high again, or the low, obviously if it's a buy. So you enter just below, this is slightly off, you enter just below the fair value gap and your stop loss goes slightly above, and that is your Silver Bullet entry. So the very first step, you want a sweep. Now ideally this sweep would be, say, from the previous range high, or it could be a swing high as it was in this instance. The second thing you're looking for is a market structure shift. So we were going up, we were putting in higher lows and we were putting in higher highs. Then the moment we come down here, we close below that level. That's our market structure shift. Did we have an extreme fair value gap? Yes, we did. It's here. Entry just below. We protect the high by putting just a small amount of a buffer. So our stop loss is now here. And the entry obviously just below. So with this particular trade, I was targeting the liquidity around this area here. So when the price come down and got to this area, I then got out of the trade. How you manage your trade will depend on a few factors. We're not going to go into too many great detail, but it would depend if you've got a trailing drawdown, for argument's sake, if you're using a company where you can't allow price to come too far and then come back on itself, or if you haven't got a trailing drawdown, or if your account is in drawdown, or you've got to pop to the shops and you know you're not going to be able to monitor a trade. There's numerous factors why you would manage this trade differently. For me, once we hit this area here, I took my profits. When I hit 1 to 2, I went to break even. So when my risk to reward was 1 to 2, here, there, when the price got to that point, I was then at break even. So I'm risk free. The break even come down, the stop loss come down to break even, and the trade is then risk free. But trade management, we go into trade management a lot in our one-to-one sessions that we offer members, purely because it's so unique, it's bespoke to you. So courses in general don't really fill the void, in my opinion. There's a reason why we have teachers when we're going through school, college, university. Otherwise, they just give us a course book to read. Everyone's going to have different questions. Everyone's minds work slightly differently. So, and also in trading, it would depend on your situation. What times can you trade? How are you trading? What prop firm are you using? Do you have a trailing drawdown? So trade management in general is bespoke to you. So I'm not really going to be covering it because it will be different for every person watching this video. So to recap on this, we need a sweep of liquidity, preferably a range high or a range low, a break of structure, as we did here, an extreme fair value gap, and then that is your silver bullet entry, protecting the high with a small buffer. Hopefully you found that of use. That's how we trade the silver bullet. Obviously we're trading it free every day in our live Discord. The link is going to be in the bio. Pop over and say hello or continue watching the series. The next video up is going to be covering psychology. Next to liquidity, probably the two most important factors I think of trading. So feel free to watch that or pop over to the Discord. Cheers.